Hey guys, a simple question that should be coming to everyone's mind right now as the markets are again at their all-time highs. So the question is, what do you see in this chart? Do you think the markets are going to all-time highs ahead? Or do you think we are at the market top? Before I'm going to share my view and a few key observations that I'm making out of the current environment, please take a look at this chart. I'm sure a lot of people are thinking, look, we got a beautiful, nice uptrend. We've got, low volatility environment in the market, which are all positive things, indicating the market could easily break out higher. Take a closer look here. Beautiful uptrend. I mean, everything looks wonderful. Accumulation, distribution on one end, looking really nice as well, and a nice uptrend. So everything just nice. Everything looks good. Here's what I see. Observation 1 and 2. Number 1, these 3 candles, right? Back to back to back. And let me try to make this even larger so you could see this, okay? These 3 candles right here. Do you see the formation of these candles? These are bearish candles to me, where the tail's taken out, sort of a failed rocket launch to the moon. They come back the same day. So this is the sign that the market is having a hard time breaking out higher. So to me, a lot of people at these levels are actually selling rather than buying. As you can see, the market tries to go higher and then it comes back every time. Now, last time you see, for example, we had a candle like that right here. We had a significant down day. A lot of candles like this right here, similar to the formation, resulted in consecutive moves lower in the markets. So I try to take observations of candles like this. To me, they signal that a pullback could be near. Okay, so what is observation number 2? Well, observation number 2 is something you probably wouldn't think of right off the top of your head, right? But let's take the magnitude of the move, the magnitude of the drop, and let's take a look at a couple of instances recently. And we're going to compare that to the relation of the move in the accumulation distribution line. Well, last time we had a move from 2790, 2780 range right here, all the way to 2675. We had a huge distribution right here. You can clearly see this, huge downward move in the accumulation distribution line. Recently, we had a move from, this range right here of 2840 roughly all the way to, 2790, right? So 60 point move right here, which is also represented by a pretty significant downward move in the accumulation distribution line. However, look what's taking place right now. The market appears, and if you're a day trader, I mean, you should definitely observe these things, right? The market just looks like it's just not going anywhere. It's just in a stalemate. It just looks like, and every time something goes higher, it drops, and every time something drops, it goes higher. It's just, the market is just not doing anything, which is typically a characteristic of a low VIX, low volatility, right? But look at the same time, in relation to the market absolutely doing nothing, what is happening to accumulation distribution? Well, to me, this move is large in context of the move, the magnitude of the move that the markets have been doing in the last few days. So clearly, we're seeing people are actually starting to sell the market at these levels. So that's observation 1 and 2. So observation 1 was the bearish candles. Observation 2 is accumulation distribution is disproportionate in relation to the size of the daily moves recently. Observation number 3, I'm noticing a classic divergence on the volume. Example number 1, the market moves from 26.25 roughly all the way to 27.50. At the same time, the volume, as the market moves higher, the volume actually moves lower. Second example, the market moves from here 2675 all the way to almost 2800. What happens to the volume? It's not rising, it's flat, it's stagnant. Example number 3, the market moves from 2700 all the way to 2800. The volume is flat. This time the market moves from 2775 roughly all the way to 2853. Another huge move higher. What happens to the volume? Clearly the volume is dropping. So we have markets going higher on lower volume. That is a case of a divergence. If we want the markets to break higher, ideally we want to see an increase in volume. However, that does not indicate that all of a sudden the market just going to start crashing. So let's take a further look to what may be pointing to some other things that we can make some observations on. Observation number 4, I'm seeing a confirmation of RSI divergence on weekly chart and lack of momentum. Let's go back in the history a little bit and take a look to see what happened before this miniature crash in February of 2018. Well, the market definitely had some momentum. Look at this. Not only the number of consecutive days higher starting in September, right? Consecutive months higher, but the rate of change at which the market was moving created a huge RSI, right? It was almost at a 90, where everybody, due to the tax reform, it was just so no other outcome for the market but higher. So clearly we saw some huge momentum going on here. We're not seeing the same type of situation right now. We're actually seeing the markets making smaller moves, yes, smaller consecutive moves here. But what happens to the relative strength in this? The strength of the market is not the same. The momentum is not the same as it was in December and January, 6-7 months ago. Okay, so with this type of RSI, which is in a downward trend, so the market moves higher to the same level again, but the RSI actually drops. That is not a bullish signal to me. Okay, so what I'm observing is the divergence in the volume, divergence in the RSI. I am looking at multiple time frame charts and they're pointing to the same thing. Now the RSI divergence may be not as clear, but it is certainly not rising. Ideally, as the market moves higher, we want to see the RSI here move higher as well, but it's clearly not doing that. Again, on the daily chart, it looks like it's moving slightly lower, and we can clearly see the confirmation of that right here. This is a much better illustration of a weaker RSI as the market tries to go higher. Now, what do we make out of this? Well, if you're a day trader, I have actually created a 13 markets move formula where I break down all the market moves into 13 typical moves. Now, it's like playing chess, right? If you know what move you make and what type of a move your opponent is going to make, then you can plan on your further moves, on your strategies on how to play this market. Okay, how to play this game of chess with the market. Today, August 9th, this is the move that we had. I call it market move number 6. So, and with the market moves formula that I've came up with over the years, it's specifically designed to help day traders, swing traders. We're not talking about a 1-year move ahead or 2-year move ahead. We're talking about what happens to the market on a daily basis going in and out. And it's the data on the sequences of the moves, which is going to indicate a higher probability of a market doing certain things on certain days. Typical observation on the move 6, it will be followed by a move 3 or 4, and both moves 3 and 4, they start early in the morning as a gap down. So on August 10th, to me, there is an 80% probability that the market will actually open with a gap down. In a move 3, it continues a downward spiral through the rest of the day and finishes lower than where it started. And the move 4, it actually bounces in midday and it reverses the downward trend. So the outcome of the day could be different in the move 3 and 4, but there is a high probability that we are going to open tomorrow with a gap down on August 10th. What is the move 6? Well, the market's been sort of in a doing nothing, as we have established, right? So it's moving high a little bit, a few points, it's dropping a few points lower, but finally the market is showing us a sign of clear exhaustion. And what we're seeing in the move number 6, the market is going to continue doing what it's been doing like over the last few days, basically not going anywhere, and then all of a sudden it's going to start selling off. Now, the importance of the sell-off is the time of the day. It's typically going to do that in the move 6 at the very end of the day, between 3:30 and 4 p.m. Not only we're seeing the markets all of a sudden move significantly lower, but what we're seeing, it's doing that on a huge volume. which is very significant. So market sells off on huge volume in the last 30 minutes of trading. So here are some key takeaways. As most analysts are cheering for the markets to break to all-time highs, the charts are not necessarily sharing that optimism. So buying some short-term put options on the market and some particular individual stocks may be a great idea. If you're not sure specifically which stocks, definitely book your 20-minute consultation / trading options coaching session and get some of these questions answered. Key takeaway number: a short-term pullback to 50-day moving average of roughly 2,680 on S&P is well overdue, in my opinion. Short-term drop may result in a much faster further drop this time, and I will give some specific reasons by observing some specific sectors over the last couple of weeks, which may create a much further spiral lower from the initial pullback. So stay tuned. Watch some of the new videos that I'll be posting on this channel. And look, guys, if you are new to trading stocks, if you're new, especially to trading options, definitely take advantage of some of the links below. Schedule your initial coaching session. Take advantage of some of the courses I put together with all the information I've learned over the last 12 years of trading. My personal record is taking $12,000 to $466,000 in 1 day of trading weekly options. So, you know, if you'd like to know how I did that, how I pulled it off, I actually have a course. If you haven't taken it, I highly recommend it because it'll definitely save you a lot of time trying to learn these things on your own. I speak from experience. I didn't read that stuff in some book. All the stuff that I'm sharing with you guys is from me taking trade after trade after trade after hundreds of trades, thousands of trades over the last 12, almost 13 years now. So I sure hope that you'll be able to learn some of the things that will save you a lot of time and save you, you know, from making a lot of mistakes that I was doing when I was starting out, and just unfortunately was not much information anywhere on how to do some of these things that I talk about. So thanks for watching the video. I'll catch you on the next one. Make it a great day.